Today I want to talk about investments. Clients often ask me what they should invest in and how they should invest their money. And whilst I'm not an IFA, I like to be able to talk about the different sorts of categories that you can invest your money in, because I think it's important to understand the types of investments and the types of risks that are involved with those investments before you really start the journey of investing your money. When you invest, very often you're thinking about your old age and retirement, or you're thinking about building up some assets that will be used throughout the rest of your life. So when you think about it, what you're doing is you're saving the money now, and you want to spend it when you retire, maybe in 50 years' time, and you want to spend that money with people who might not even be born yet. So that's quite an incredible thing that you want to do, and it's one of the sort of the miracles of money, that you can save now and spend the money with people who are not born. Fantastic. But obviously that comes with risks. So the first thing that you can have is cash. So cash is really useful. It's useful because you can buy things in the shops. But I've got a little example here of some cash. So this is a £10 note. If you look at a £10 note, now if you're my age and you look at a £10 note, what you'll notice is that it looks really like a 10 bob note. And the thing about it is that it buys the same as a 10 bob note. And for those who are younger than me, a 10 bob note now is 50p. So basically a £10 note is worth 50p, or the other way around, whichever way around you look at it. So although cash is really useful, the drip, drip, drip of inflation over very long periods of time destroy its value. And inflation, even at current relatively low rates at 3%, inflation at 3%, interest rates at 0.5%, you lose 2.5% of your money every year, sort of guaranteed. So cash is useful, but you need something else if you want to have real value in the future. So sort of the next level is things that give interest. So that's government bonds, or big companies also issue bonds where you lend them money for 10 years or even 30 years to the government, and they'll give you an interest rate for over that 10 years, and it'll be agreed up front. So if you want to buy a government bond, it'll give you an interest rate of 2.5%, 3%, a bit short of 3%, and you get that for the next 10 years. But bear in mind that inflation is at 3% and you'll pay tax on that interest, then you're still losing money by holding a government bond. Less money than by holding cash, but you're still losing money, and that's not really what the point of saving is. A lot of people are really interested in property. They're interested in property, I think, because you can see it, touch it and feel it, and because, as a matter of fact, it's been possible to make a lot of money out of property. Now, there's two sorts of property really. There's domestic houses, which is your own house and buy-to-let, and then there's commercial property. Buy-to-let in the past has been a fantastic investment, I know that, but now the values are much higher than they were, and also we've got to be aware that the government's sort of attacking buy-to-let by reducing the amount of tax relief you have and by increasing the taxes on it. And also in the background there is suggestion that there might be rent controls which will sort of destroy the values. So buy-to-let is, and commercial property can be really important. They're really good because they give you a rental income every month, which is fantastic. They're a hedge against inflation because, in theory anyway, property prices should rise in line with inflation. But the bad side is maybe the glory days of buy-to-let are over, maybe they're not, but there is that suggestion. And also they're very lumpy. So if you buy a whole property, then it's quite expensive to buy it because there's a lot of legal fees and all that sort of stuff. And also when you're buying one, you're spending sort of tens or hundreds of thousands of pounds. So it's a large amount of capital each time you do that. The next sort of investment you can have is stocks and shares, which could be shares in your own business or shares on the stock market. The problem with that is that they go up and down in value, so it's great when they go up in value, but not so much fun when they go down in value. And on a day by day and week by week basis, they do vary in price. But they should be a reasonably good hedge against inflation, and you get dividend income every sort of 6 months or every year, which comes in really handy. So stocks and shares can be part of the mix that gives you security. And there are other things that have come along. So I get asked quite a bit now about these cyber currencies, Bitcoin and all that sort of thing. I just don't understand it well enough to invest in it myself. I also think it doesn't work as a currency just at the moment. And it doesn't work because the value of Bitcoin goes up and down by too much. So you can't really, as a means of exchange, it's a bit rubbish, because if it's worth twice as much today as it was yesterday, and then tomorrow it's worth half as much as it is today, then you can't really do transactions properly. It might be a reasonably good store of value. The other thing that worries me slightly about it is that if it works, somebody somewhere is making a huge amount of money out of Bitcoin. If that's the case, it just occurs to me that all the charlatans will pile in, and they'll see the easy money that can be made, and then it'll become much more risky. There are other sorts of assets. You can have gold and valuables, which can be useful, a great store of value, but they tend to not give you any income, and they tend to there's a risk of theft. So what I've covered there is all the main classes of assets: cash, bonds, property, stocks and shares, Bitcoin, and valuables. And most investments are one of those things in one way, shape, or form. So what do you do? Well, to my mind, it's really important to have a balance between them, because each asset category does have its good points. It also has its risks. And if you want to manage your risks, then having a balance between them is the way to go. Because 50 years' time, the world will be a very different place to what it is now. Just as in 50 years ago, it was also a very different place to what it is now. If you've got any questions about investment or any other financial stuff, then please get in touch with me. Please feel free to like or to subscribe to this YouTube channel. Thank you for watching.